There's a certain type of guy who's been warning anyone who will listen about a US debt default for as long as anyone can remember. And those guys, especially one of them in particular, is really feeling himself right now.
I've been saying this all along, that foreigners, by accumulating such a massive amount of US debt that we can't repay, are taking a tremendous risk. One of the other non-tariff barriers that Bessent keeps talking about is foreign exchange, which is also...
Peter Schiff has been telling anyone who will listen that the US prints too much money, racks up debt at an unsustainable rate, and it's eventually going to catch up to them, since long before he hired a stylist. Here he is in 2013 at a gold show in Vancouver.
Seeing this, and then they're putting their money into gold because it's a safe bet. And in fact, you were the one who saw gold going to 5,000. Do you still see that?
Yeah, well, I've been saying that since it was under 300.
So you still believe that?
Yeah, and it might actually go a lot higher than that because we're still, pursuing these inflationary policies, and eventually, who knows? I mean, there might not be a number large enough to describe what the price is going to be, at least in terms of U.S. dollars.
And Schiff might be the loudest one, but he's hardly the only one. There's plenty of old newsletter guys who have been on the narrative for years, telling anyone who will listen that the US government is making trash out of the dollar and that gold is real money. Richard Russell might have invented the Gold Bug newsletter. He's no longer with us, but there have been and are lots of them. David Morgan, Adrian Day, Bob Bishop, they're all singing the same song because it's an easy one to sing. Doug Casey is one of the more likable ones.
If the US government defaulted on all of its bills and bonds and contingent obligations and so forth, at that point, what would happen? All the entire financial structure of the country would collapse. Insurance companies, corporations, the currency would collapse. It'd be worth nothing because debt would be worth nothing at that point because the dollar would be worth nothing because the dollar is nothing but debt. So it would be real chaos. I've got to admit, real chaos. And chaos never ends well because there's always somebody that comes in to fill the power vacuum.
And Doug recognized early on the U.S. economy is in a doom loop.
But they painted themselves into a corner at this point. They can't default, so they're going to have to keep printing. But if they keep printing, to keep it going, they're going to have to keep... I don't see any way out of this thing. We're headed for a real catastrophe.
And now, finally, improbably, the mainstream media is saying the same thing. Headline after headline talking about the possibility of a US debt default. Usually when the media gets onto a trade, it's time to sell. But the news stories haven't picked up the gold part of the newsletter and conference crowds act. At least not yet. They mostly talk about the chances that the US government will default on its debt, which has become really real really fast. It feels like they're still in shock at the fact that they have to even discuss a US debt default. Although I think it's safe to say the gold market knows what's up. It broke through $3,000 an ounce for the first time ever in March, bounced off of the $3,000 level in April, and it's starting to feel like it'll never end up back down below the $3,000 an ounce mark ever again. The media won't start to work the gold price into the debt default stories until it's all but imminent. And pretty much any of these gold newsletter guys will tell you that. At $3,000 an ounce, gold is just getting started. Don't miss the Rural Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. To understand what a debt default might mean for gold, we'll need some background. Reserves are what make banks banks. Every bank you've ever seen is a big granite building in the center of town with big Greek columns out front that looks like if anyone ever tried to tear it down, they would probably break a few bulldozers. And in the middle of that bank, there's a big vault with a big wheel on it and walls 3 feet thick that could keep out all the bad guys from all the heist movies put together. That vault is there because a bank isn't a bank unless it has reserves. Actual valuable monetary assets that can be liquidated to pay depositors if the income the bank generates doesn't cover the payments they need to make. Central banks, the banks that back national currencies, are the biggest banks. Traditionally, they had the biggest vaults, and those vaults held reserves in gold. Today, they still have some gold, but as a group, central banks' reserves are mostly the currencies of other countries, usually in the form of debt denominated in the currencies of other central banks. Globally, about half of central banks' currency reserves are kept in US dollars, but that's been in decline since around 2022. The United States is the world's largest economy, and they issue the world's safest form of debt, US Treasury bonds. Since bonds pay interest, investors have come to like them more than gold, which doesn't pay any interest and is more volatile. Big investors like central banks, whose reserves are there to give them stability, don't like volatility. So government-issued paper has become the solid, stable, interest-bearing asset that central banks are built around. The US government issues the most paper because they borrow the most money. $37 trillion at last count. And that's why US Treasury paper makes up the largest portion of all these banks' assets. The consensus is a government that lords over a $30 trillion economy and needs to be able to borrow more money to keep that economy running is always going to pay its debt. They have to, until they can't. It's absurd if you think about it out of context. The governments are able to issue bonds because they have central banks, which are backed by reserves. And all the reserves are bonds issued by other central banks. And every year they issue more bonds than they did the year before and all buy them off of each other and use them as reserves in their central banks that allow them to issue more bonds. And you start to see what Peter Schiff and Doug Casey have been on about all these years. But in context, the US government has the power to tax the largest economy in the world. If they need more money, they can just collect more taxes. But nobody likes higher taxes. The Doug Caseys and Peter Schiffs of the world will tell you with absolute conviction that higher taxes will stifle economic growth. But if the US is going to have money to spend on defense, Medicare, and Social Security, it's going to have to come from somewhere. And there is one option available to them that doesn't involve raising taxes.
I always say tariffs is the most beautiful word to me in the dictionary.
The big guy has been keen on tariffs for a long time. In January, when he took office, the gold chart started telling us what the gold market thought about how Trump was going to fix the economy. And then came...
My fellow Americans, this is Liberation Day.
And this is where the rock-solid US economy holding up all those bonds started to show cracks. The tariffs were on in perpetuity, until they were paused to put the stock market back on track. And then some were put back on, others were paused, some of them were decreased, some of those that were decreased were then increased to a point where nobody really knew what was happening anymore. Uncertainty breeds chaos, and the tariff turbulence is starting to look like a real headwind for the US economy. The on-again, off-again tariffs on China might be the most serious headwind. Cheap goods being made in China and sold in the US are an important part of both of those economies, and the Chinese probably don't appreciate being jerked around. Back in 2013, Peter Schiff was pointing out that there were some crucial differences between the Chinese and American economies.
So there's real economic growth. Living standards are rising in China. Whereas in America, they talk about all of our economic growth and all of our productivity. Meanwhile, our trade deficit gets bigger and bigger and bigger.
It's the same as any other deficit problem. The US needs to either spend less or collect more taxes. But nobody wants to hear about higher taxes, especially in a slowing economy. And since Trump is floating a big, beautiful bill that will lower taxes, people are starting to wonder where the money will come from. Gold is a fear trade. It's where investors go when interest rates aren't keeping pace with inflation, when the yield curve is inverted, and when they need the safety of money that isn't someone else's credit. The Treasury hasn't stiffed their creditors yet, but the idea that they might is hanging around, getting more real all the time. And as it gets more real, central banks might look to add gold to their reserves. China has already started, adding about 800 tons of gold to their reserves since 2022. With more than $3 trillion, China's central bank has the most currency reserves out of any central bank. But the gold reserves they hold don't even make up 7% of their total reserves. It's reasonable to think they might add some more. Germany, Italy, and France keep something closer to 70% of their reserves in gold. Switzerland, which knows a thing or two about banking, has just under 12% of their reserves in gold. Japan is the largest holder of US debt, and they might have a bigger problem than the US. The US government's debt, that mountain of debt that even mainstream economists are wondering out loud if will ever be paid back, is about 122% of their GDP. Japan's debt load is presently 216% of their GDP, and a recession might make it a whole lot worse. Meanwhile, Japan is holding less than half as much gold as China, and about the same amount as a percentage of their total reserves, less than 7%. With less than 7% of their reserves in gold, there's a good chance that both Japan and China might be adding to their gold stash. China has $3 trillion worth of US dollar denominated debt, but enough gold to make it just 10% of their foreign currency reserves would mean buying $107 billion worth of gold, assuming they can get it all at $3,000 an ounce. But if nobody does anything to get rid of this US debt default idea, they might not have to buy any at all. The ratio might get adjusted all on its own with a price move. And where would that leave the US? Well, the biggest gold stash at any central bank, that blue line right up top ahead of all of the other ones, is, you guessed it, the United States. 8,100 tons of gold at $3,000 an ounce comes out to $84 billion, about 1.16% of the Federal Reserve's total assets. So when it comes to an asset mix that hedges against US debt default, the US has the most gold reserves. The best gold reserves.
It's really incredible. Actually, people are saying it more and more all the time. Folks, there's never been a bigger or more successful hedge against debt default than...
Now look, we don't know what Trump thinks of gold or how he sees it in the scheme of whatever he's trying to engineer in this economy. But if someone he galls with ever tells him that a US debt default could take the gold price to $20,000 or $50,000 an ounce, and it happens around the same time he finds out that the US is holding more gold than any other country, Trump might just forget about the fact that the US dollar isn't made valuable by the gold in the Federal Reserve, it's made valuable by the US government paying its debts. And he might see the US defaulting on its debts as an opportunity for a great deal. A real legacy maker. He does love gold. So are Peter Schiff and Doug Casey right? Well, not yet, but they're close. For years, it was looking like they were going to be right eventually. But it's hard to trade eventually. Now they're starting to look right in the near term. All right, everybody, thanks for watching. If you got stories you want us to cover, let me know in the comment section. If you think the US might actually default on their debt, I know it sounds crazy, but under Donald Trump, I think anything is possible. I'm not saying it's going to happen, but I think it's something that, quite frankly, could happen. Again, with Donald, we just don't know. Let me know what you guys think in the comment section. All right, everybody, do me a favor. If you enjoyed this video, smash that like button, subscribe, ring that notification bell. All right, everybody, thank you for watching.